Hey, this is Matt from InvestiQuant. Today is Tuesday, January 5th, 2021. Yesterday was the first trading day of the year, and it was a big one. We had a huge range that took place as the market opened up at all-time highs and then sold off all day. Giant range, large volume, big down day in the markets yesterday. So what we had was the first trading day of the month was down big. It ended up closing below the low of the last trading day of the prior month. So what I want to do today is look at that pattern specifically. What happens historically when you start off the month closing below the low of the last trading day of the prior month? So off to a weak start for the month of January. And let's go ahead and set this up here. Looking at all four instruments, the setup's going to be based upon entering the market long at the open and exiting at the close of regular trading hours. Now, normally I come in and select an opening filter. I really don't know where we're going to open right now, so I'm just going to leave that out, and you guys can go in and adjust this as we get closer to the open and we know where we're going to be at on your own to add that type of context to it. The rest of the pattern that we'll be looking at is, like I said, based upon closing below the low of the last trading day of the prior month. So what I want to do is I want to come into this last open and close category within the price patterns. I'm going to say yesterday closed below the low of 2 days ago. So that's this option right here, close below low 2 days ago. And that means that yesterday's close was below the low of the prior session. And then to make this specific to that being the first trading day of the month, what I want to do is go into our seasonality filters, which are in this calendar library here. And in the unique day section, we have day after first day of the month. So I'm going to actually grab that just from the active today because that's the easiest place to grab the things that are applicable. That's right here. It's also in this category as well. And then lastly, I'm just going to put it above a 200-day simple moving average. I'm not going to get any more specific than that because we'll start running out of samples too quickly. So I'm adding above a 200-day simple moving average here, and now I can click View Results. All right, and here we go. These are the results of going long at 9:30 a.m. Eastern Time and exiting at the close, which is 4:15 p.m. Eastern Time, when the first trading day of the month closed below the low of the last trading day of the month. This has taken place above a 200-day simple moving average. So historically, we've got 37 samples in both the S&P and the NASDAQ. The Dow has 35 samples, the Russell 31 samples, so pretty similar sample sizes across all four instruments. If we look at the win rates on these, which is telling you what percent of these historically have closed above the opening print for that day or ended up with what would be a green daily candlestick, you see the S&P coming in 59%, the NASDAQ coming in at 57%, the Dow 57%, and the Russell 55%. So all four of those just a little bit more favoring the green candlestick closing above the open. Not huge win rates, but just a slight lean on that side. And if we look at the average win and average loss, the average loss is larger than the average win in the S&P. That is also true for the NASDAQ. The average loss is bigger than the average win there. That is true for the Dow, and that is true for the Russell. So all of these have win rates that are slightly favored. However, when they've been wrong, they have lost more than they have won. So what that's telling you is if you look at all of these as like a daily candlestick, you'll see more green candlesticks than red candlesticks. However, the red candlesticks will have bigger bodies on them compared to the green candlesticks. So the red candlesticks are larger if you're looking at a daily candlestick of each of these, but the green candlesticks are more frequent. So hopefully you found that helpful. Good luck today, and we will see you next time.